Agencies will be watching the 2017 budget speech on Wednesday very closely. This year's budget is set to focus on taxes, which include the implementation of the sugar tax, as well as possible VAT increases. SABC News spoke earlier to the Chief Economist at Investment Solutions, Lesiba Mothata, for his expectations of the upcoming budget speech.
No one really never wants to pay more taxes, right?
Correct.
Less taxes preferred to more. But I think what's going to be the focus, I won't be surprised if they introduce a higher tax bracket for those who earn a lot more. Perhaps even a tax rate at 43%, at that higher tax rate. Obviously, other things that are going to arrive will be there. The fuel levies likely to go up. They'll continue with the sugar tax. They will do all the wealth-related taxes, which are capital gains. Which are your donations tax, all these or real estate tax that you get involved in. All these things that are wealth related are likely to go up. Remember, at the World Economic Forum, there's just an angst that, you know, the world is becoming increasingly unequal, and the rich somehow has to begin to contribute more directly, the 1%, more directly to the coffers of the fiscus, I would imagine.
In order to narrow that gap between the rich and the poor, that is definitely essential. But we will also see, apparently, the reintroduction of the traditional levy tax to assist government in balancing the books. What do we know about that? And is that perhaps a worrying factor when we actually talk about VAT to be increased as well, especially for the poor?
VAT is such a pervasive tax. It cuts across all aspects of life. You buy a house, you pay a VAT tax. You enter in any fees with a professional, a lawyer, an accountant, or quantity surveyor. If you're building, you pay a VAT on every invoice that comes. So it's quite a thing, and I'll be surprised if they go there. Because right now where we are, there's a nascent recovery in the economy. We're talking about more than 1% GDP growth, as opposed to the one that we got accustomed to between 0 and 0.5%. If you increase a tax like that, it could actually throttle this recovery that's happening, which is not desired, because in the medium term, I'll say medium term is in the next 2 to 3 years, GDP could actually approach 2 or even above 2%. So if you do that, it really could stall this recovery. In other words, fiscal authorities at the Pretoria who gets it, and they understand the cyclical recovery that's going on, I wouldn't imagine they want to make sure that they could stop this recovery that's happening. I'll be surprised if VAT goes up.
Let's talk about investment. Now, this is another major talking point. It seems that the country has been faced with a steady fall in the economy's GDP ratio after reaching a peak in 2011. How should we aim to get investment back on track? And is there a drive to get investors on our side?
There needs to be a drive, and therein is the challenge. In fact, I was reading a report from the Institute of International Finance. They look at FDI flows in the world. They also look at capital flows. And they came to the conclusion that they revised downwards the potential inflows South Africa can receive in 2017 is the second worst after Mexico. Considering what's happening out there with Donald Trump and all the war discussion and NAFTA and all those discussions with Mexico, they revised it the most. And the reasons they gave, it was very telling. They said the SA is going to struggle to attract FDI because of lack of growth and the political situation that's proven difficult. I think that requires a concerted effort. I'm on the roadshow or whatever discussing about how we need more private capital to be at work. In fact, there's a report from the World Bank that suggests that we need private business in South Africa, which is standing or sitting with a huge amount of cash, to begin working that balance sheet. And that will require some external stimuli, and we look forward to see if the minister will be able to some margin, contribute to lifting our business confidence.
Now, in a recent article you wrote, you also mentioned that there is a deep and ongoing business investment recession that's happening in South Africa. That's very strong.
It's a recession. On a year-on-year basis, 5 quarters of negative growth in private capital formation. In other words, businesses are not creating new capacity to create new economy, because that's where that comes from. We must appreciate that in South Africa, more than 60% of new capital formation rests with the private sector. And they have not been doing that for the last 5 quarters. It is a recession, and indeed it requires attention, and I'm hoping that policy will begin addressing that.
There's a number of other issues that I want to touch on, but because we're running out of time, but there is one issue that we need to focus on, and that is the banks colluding, and of course it seems that there's going to be a heavy fine. But if we talk about collusion and we go back to the many years, they date back to 2007, some are suggesting even 2002, what is the cost to the economy for the country, you think? A ballpark figure.
Sure. In rands and cents, it's going to prove very difficult, but the net effect of it was, if you think about the latter part of where this thing has happened, 200 basis points increases in the SABC rate, with a significant depreciation in the rand, with inflation that peaked at 6.5% in the last quarter. And that really has gone into the heart of how this economy has functioned. It's undesired. It's undesired that we can find monopolies that can create ease of conversation between traders to make sure that the rand can actually move in one direction. What is very clear when these things happen is they can push the currency. It's never when it appreciates, it's always when it depreciates, and that could prove very destructive to the economy.